Tomorrow is stock index rollover. We also are sitting at worst case drawdowns in some of these portfolios. So what do? We talk about how markets change and how we have to start in a drawdown to buffer worst case drawdowns and technical errors. So that happens, and we've been on a nice run since February, March, and now we're just hitting this turbulent time period. And there's some couple of things you can do. I'm going to go over that, and keep in mind stock indexes roll tomorrow. Change the U to a Z and close and reopen your workspaces. Let's go over all the portfolios, and I'm going to go over the update. I have some workspaces here. The All 78, it did not make a worst case drawdown on this cycle. It most recently did make a worst case drawdown, and so we're going to use that as a model. It made a worst case drawdown. It actually made a worst case drawdown here, and then it bounced. This drawdown right here is not another new worst case drawdown like we're seeing in some of the portfolios. We're going to use this kind of as a model and on some of the others. All Strategy X is shortlist 51. We have a new worst case drawdown here by a little bit, and you see down 15K, down 3,400. Up on the year, it's had a nice run. You need to manage your risk. Look for a bounce right in this area. All Strategy X is 51 plus 7 new. It is sitting right here. Let's let this update. Right here at a worst case drawdown. It was at 25 and now it's at 26, so it barely made a worst case drawdown. And so you see it's at 115 on the year. August was down. We're down in September. And so, so here's what you are looking at. It is, so it's hard to see that. Let me see if I need to update this. So the chart data was a little off. I had to refresh it. And you see it's not bad. This worst case drawdown right here is not bad. So if you want to rotate to this one, this is a good portfolio to step into for a bounce. We just have had some really challenging market environment after a nice, for the most of the year, pretty nice year. This strategy, this portfolio was up in January, down a little bit in February. Nice run through July, tough August, and down in September. So you want to manage risk here, and based on your capital and your risk tolerance. And if you started here too, you can start in a drawdown. If you have more capital, this is a good place to start because it's just right there at that worst case drawdown. Get in on a drawdown, buffer these worst case drawdowns. And this is one of my favorite portfolios right here. I've updated the 200K portfolio to combine the best of the All Strategy X's 51 plus 7 and the All Strategy X's 78 for the current market environment. Stock index portfolio actually held on its worst case drawdown. Let's look at the updated results here. It actually held. It's actually only in a $9,000 drawdown. So gold is one of the culprits that we're dealing with. It was actually up in August. So gold is one of the difficult markets that we're dealing with. Here is the drawdown curve. It's kind of jumpy here. So it made this worst case drawdown. It's not updating. So let me get this updated. So for some reason these charts are not updating right now, but I'm having to manually refresh them. So you see that this worst case drawdown held, and so this is one of my favorite portfolios as well. So the stock indexes are not really doing that bad. This group of 27, gold and some of the other commodity markets have been more challenging. 200K portfolio, new worst case drawdown today. So I've got an update for that I'm going to share with you. So let's look at this update. 24, 299.40 coming into this portfolio. The worst case drawdown was around 20,000. You see the drawdown in August and in September, and it started in a drawdown in August. So this is the beginning of July. So once again, I need to update this way you can do that. Select data. And so you see this worst case drawdown right here. So that's why we start in a drawdown, to buffer worst case drawdowns, because we anticipate worst case drawdowns in the future. And the goal is to get started and get on a run and then treat these drawdowns. You can either treat them like a trailing stop loss, or you can, if you have more capital, you can add to them. And so this is a point where you can wait for the bounce, you can stop, you can scale back, you can adjust. And I'll show you my recommended adjustment here in a minute. 50K portfolio is in a $6,500 drawdown. So 50K has held up pretty well during this choppy time period. Down 3,600 in August, down 145 in September. And so you can always scale back to the 50K portfolio. It is due for a bounce of $6,500. So you could trade more than one contract of that if you wanted to as well. It's another thing you can do. The micro portfolio aggressive. Let's look at that. And it's in a 19-17-75 drawdown out of 43-12-25. You could also trade this portfolio with minis. It would have a, if you trade this with minis in regular size contract, it'd be a $43,000 drawdown in $19,000 drawdown at $43,000, and so that's held up. The micro portfolio conservative is tied to the 200K portfolio, and it is also at a new worst case drawdown. Once again, that's why we anticipate that these will eventually happen, and when new levels of volatility and chop increase, these charts are not updating, so it makes it extra difficult to make this video right now. Let's adjust this data. You can adjust these data sets to make it manually update. Need to adjust the other one as well. So here is the updated conservative portfolio, micro conservative. Like we said, we always anticipate worst case drawdowns, and we have to prepare for those. We don't take the approach that when I first started trading, I said, okay, I'm going to develop the perfect strategy and hope it never makes a worst case drawdown. We don't do that. We anticipate worst case drawdowns, and so we start in drawdowns. And now would be a good time to start if you're not, or add to it if you have the capital, and if you have reached your risk tolerance, you have to scale back to. If you're already in it, you know, if you started right at the equity peak and it went straight into a drawdown, that's the worst case scenario. So if you start here and he goes into a worst case scenario, worst case drawdown, and you don't have the capital to trade, then that's the worst case scenario that can happen. So that's why we recommend starting in a drawdown. You usually get a bounce eventually, and then you can make adjustments. It's better to make adjustments on a bounce. But what we're doing in the 200K portfolio is unique, and you can take a look here at this. We're going to go back and look at the 200K portfolio. Hopefully this will update. So saving it will update it. So I have updated this, and you see what one of the things you can do is you can wait for a bounce right here, or you can rotate into something like this where it's almost at a worst case drawdown and wait for it to bounce, and you have more of you have greater bounce potential here. The bounce potential to equity peaks is 24.2. Right here it's at 32.9, and so you're stepping in here. You're trading a portfolio with a bigger, largest winning day. The largest losing day in the current 200K portfolio is 12K. The largest losing day in this setup is only 11,460. So you don't have you're not increasing your largest losing day. You're improving your largest winning day, and you're setting it yourself up to take advantage of larger potential moves. In these markets, they've been so volatile. They tend to, when the market's tightly wound like it is, it tends to break out. And so I've got these new set of strategies right here. There are more strategies as well. There are 57 instead of 40 because you're getting in on a drawdown, and not all these trade at the same time. You can trade these with 200K. I'll be sending you the workspaces. I'll be sending out an email with these workspaces and this spreadsheet. So derive this from the best of the All Strategy Access 78 and All Strategy Access Shortlist 51 plus 7 new, and the workspaces. I'm going to show you what those look like. So here is the workspace. Keep in mind, rollover. Once again, we have to roll over to ESU 21. This one needs to be at ESU 21, and you see all the after hours 3.0 is already trading. There's 18 strategies on the ES. There are 11 strategies on the NQ. Gold, there are 10 strategies on gold. And silver, we have 3 strategies on silver. Copper, we're adding copper. Crude oil, 10 strategies on crude oil. Hasn't traded much. Natural gas, hopefully we'll get some more trades in natural gas. We have, let me double check this. Natural gas is only 2 strategies, not 4, so that's good. I thought that did not look right. Make sure you check this against the spreadsheet when you get this. I am sending this out ASAP. So we want to delete this one, the 15-minute and the 5-minute. So just 2 strategies on natural gas. Soybean, same 3 strategies. Still working on an update for SR Counter Trend 2. And that is what I have for this. I want to keep the same amount of risk an additional $5,000 for the bounce, and look for a bigger bounce. We have more NQ strategies we're adding back now as we look for that bounce, because there's been so much chop, and so we want to put ourselves in a position. We also have some of these have tight stop losses, which we like. We have tick pullback. We have SR counter trend right here, SR counter trend 2V21M, AT20 NQ, EVP1, gap continuation, big stop loss, and then we have the 60-minute breakouts. And so that is what I recommend. Obviously, on your side, you can manage it. Stick with the current portfolio. You can scale back a couple of the top strategies in the NQ that can catch the big moves on the long and the short side are the Cobra 3 NQ and gap continuation NQ. So you have Cobra 3, you have gap continuation 2020 NQ, you have gap continuation 2019, big stop loss. It was up on the day just a little bit. So that is what I'll be sending out. That's what, when you see this email, you should be getting an email with the latest workspaces and portfolio spreadsheet calculator, and potentially more updates as I'm just continuing to research new strategies in such a choppy market environment.